7 foolproof strategies to grow your savings fast. If someone gave me $10,000 today, I would not spend it on luxury vacations, expensive watches or bags, or a new car. Instead, I would consider investing the money to potentially grow it even more or make a big difference in someone's life in the future. Dear viewers, if you appreciate the video and want to help us grow, we ask you to consider the idea of subscribing to our channel and making a donation to support us. Your support is essential for us and will allow us to continue creating interesting and useful content for you. You can do it here below, through the appropriate buttons, subscribe, and thanks. The first option I would consider is creating an emergency fund. Although it may not be the most exciting thing to do, it could potentially be a lifesaver, especially in difficult economic times. Emergency funds are savings that you have in case of a rainy day, or if things go seriously wrong and you need some immediate cash. It is generally recommended to maintain an amount equivalent to 3-6 months of your current expenses. If you were to lose your job or your business were to close, this money would be used instead of going into debt and potentially facing bankruptcy. Remember, paying high interest rates on loans can be very penalizing and can financially strangle anyone. Therefore, having an emergency fund on hand could act as an insurance policy and potentially save you a lot of money in case of an emergency. Ideally, you would want to keep the fund as liquid as possible. I would recommend keeping it in a savings account or investing in short-term treasury bills with a 3-month duration. Another interesting thing you could do with the $10,000 is to pay off any high-interest debt that you currently have. For example, you may have a remaining balance on your credit card with an annual interest rate of 20%. You should consider paying it off as soon as possible. The way you benefit from this is that a high-interest debt is costing you money, and if you pay it off, you will save that money. Once you have created an emergency fund for yourself and paid off your high-interest debt, you can then think about investing in your retirement accounts. However, there is a maximum contribution limit that your employer will specify. Any investment you make beyond this limit will not be matched by your employer, so keep that in mind. The third type of retirement account is called a health savings account, HSA. Both your contributions and profits in this account are never taxed. It is currently one of the most tax-advantageous plans in the world, yet it is the least mentioned. It can be said that it is a well-kept secret. The only downside is that the money withdrawn from this account can only be spent on health and medical services. But considering that we will all eventually age and require more medical care, I would recommend making some investments in this account as well. Another investment option, aside from retirement accounts, is to purchase certificates of deposit, CDs, or bonds. These investments offer a fixed return and a low risk. If you are looking to maximize your returns, you should aim for long-term, high-yield government bonds. On average, these produce somewhere between 3% and 5%. Whether or not you choose this fixed return investment option will depend on your investor profile. Most mature investors like the idea of a fixed return, while younger investors are looking to create wealth for themselves and therefore prefer other, riskier investment options. This fifth investment option is for those who want to do something big with their $10,000. If you are thinking of creating a small fortune for yourself but do not want to invest in something too risky or crazy, you should consider investing in index funds. Index funds replicate the general performance of the market and represent a small stake in many stocks across multiple sectors. They offer much more diversification and much more long-term growth than CDs or bonds. Investing in an index fund is what can be called a passive investment strategy, and it is, therefore, a very cost-effective strategy for the investor, as the fees are almost negligible. Historically, the S&P 500 has given a return of around 8% per year, assuming that dividends are reinvested, which is not a low return at all. Another advantage of an index fund is that it is easy. You do not have to spend hours selecting an individual stock. You do not have to time the market in the way you would try to do when buying individual stocks. At the end of the day, the only thing you have to do is click a few buttons and buy a total market index fund. And that's it. You're done. If investing in index funds is a bit too boring for you and you are interested in even higher returns, you may want to aim for individual stocks. We all know that investing in individual stocks can be by far the riskiest activities to invest in. However, the potential returns can also be potentially the highest. Buying individual stocks is the best strategy for you if you are 30 years old or younger, as you have time to let your portfolios grow over a 20-30 year investment period and therefore capitalize on huge capital gains. Younger investors also have a higher risk tolerance and are therefore not as concerned about potential market and price fluctuations that may affect them along the way. If you have a knack for investing, you should choose the option of buying individual stocks. I recommend buying individual stocks in your Roth IRA or 401k plans. This way, you will also benefit from tax savings. However, if you choose to open a free brokerage account instead, that is another option. If you are good at picking stocks and are patient and do not worry too much about price fluctuations, then individual stocks are for you. As for me, I am much happier to invest in an index fund because I have the peace of mind that my investments are much safer and less subject to my irrational emotions. I tried to invest in individual stocks a few years ago, but they just didn't work for me as I found myself constantly looking at the trading screen and rebalancing my portfolio, which increased my costs. I had made my fair share of losses when investing in individual stocks before finally deciding to invest in index funds. Perhaps you will be able to exercise more rationality when dealing with individual stocks and avoid valuation errors due to human emotions. The last investment option you can explore with the $10,000 investment is the real estate sector. Now, obviously, you would not be able to own a property or a house worth $100,000 with this amount, but perhaps you can use it as a down payment to secure a mortgage on the house. If the value of the house increases by 20% next year, this represents a huge return of 200% on your investment. It is really that easy to leverage your investment in the real estate market. In addition to investing in physical properties, you also have the option of investing in REITs or real estate investment trusts. They act like mutual funds in which a group of investors owns a particular property, and the rental income from that property is paid to them as dividends. As the value of the underlying property increases, the value of the REIT shares also increases. Whichever investment option you choose, know that you have consciously made the right choice by investing in your future income, which could potentially have huge returns in the future. You are one step closer to achieving the dream of financial freedom. In the comments, share your direct experience related to the topic covered today. We want to learn more and will gladly respond to any questions. Comment to let us know how we can improve. Your like would make us happy. Do not forget to subscribe to the channel so you don't miss the next video.